Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, thank you for making time today.
Good afternoon, Devin.
Well, we now see Korea posted a current account deficit in April at the height of the pandemic, $3.1 billion, which is the biggest deficit since 2011. Tell us a bit more about that.
In the global community, Korea has been recognized as a forever current account surplus country for a decade. However, that positive current account is broken in April in nearly a decade. The country posted a current account deficit of $3.1 billion in the month, marking a turnaround from $5.9 billion surplus the month before. This current account deficit is mainly due to a sharp decrease in exports than that of the import decrease, and this is, as we know, caused by coronavirus pandemic.
Indeed, especially petroleum products and automobiles, but many are expecting us to go back to a current account surplus for May. What do you say, Professor Kim?
I believe so, basically. And according to Bank of Korea, early May's trade data shows $430 million trade surplus. So we can expect somewhat positively that a current account balance will post a surplus too, if other things like service balance and income balance are the same as before.
Right. Well, in other news yesterday, Finance Minister Hong Nam-ki said he expects Korea's economy to contract by about 2% in the second quarter, but then in the third and fourth quarters to go back to positive territory. What's your expectation?
Basically, what Minister Hong said is V-shaped economic recovery. That would be a possible scenario if there is no second coronavirus pandemic and our major trading partners like China and U.S. recover in the same pattern as we do. But most of economists agree that U-shaped economic recovery is a more realistic scenario. That means Korean economy begins to recover from early next year, 2021.
And speaking of expectations for a recovery, the rally continues on Wall Street despite all the negative news like the pandemic and the riots in America. Investors looking forward to economies reopening. Take us through the global markets.
U.S. stock climbed higher yesterday as hopes on more government stimulus shrug up social unrest across the United States. The representative U.S. stock market index, S&P 500, for example, increased by 1.4% in a day. And in yesterday's market, European markets all had 2 to 3% very high daily return due to the expectations on stronger stimulus from both of governments and European Central Bank. But European markets, which opened the session just minutes ago, is declining quickly right now. And Chinese market and Hong Kong's market had a negative return today due to escalating U.S.-China conflict over Hong Kong's controversial new security law.
And surely the U.S. suspending flights to China also playing a role there. But here in Korea, stocks started out strong, but the rally fizzled out by the middle of the session. What's the story in the Korean markets?
Domestic market has started with a big gain, but it has barely ended with a positive return. Actually, in the morning session, there was a huge domestic individual investors buy, which made over 1.6% return on daily basis. But domestic individual investor turned to huge sell in the afternoon. finally, Kospi increased by 0.2%, and Kosdaq also increased by 0.6% in today's domestic market.
All right, Professor Kim, we'll have to leave it there for today. Thanks so much for sharing your insights, as always.
Thank you very much.